following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom, you really assembled a stable of amazing people. I mean, they all have different strengths, different areas. And,
Yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigers and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now, I would say.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. And let's make it a great autumn. I believe it's the first day of autumn. Summer's over, right? September 21st. Heal yourself, and your relationships will heal too. If you heal yourself, then you are going to be ready for a relationship without fear, without need. If you and your partner each work on yourselves, you will see how quickly progress is made. Market-wise, let's take a look at it out here. We have the Dow Industrials down 36, NASDAQ off 21, S&P's flat. Markets might as well be flat, folks. Down 36, big deal, right? Gold contract down 21 bucks, trading at $12.94 an ounce. Silver down 30 cents, $17.03 an ounce. Both gold and silver, they did get whacked, no doubt. Platinum down $7, $9.38 an ounce. You got the light sweet crude market flat, $50.63 a barrel. Notes, 10-year note up one tick, 125.21. 30-year bond up 8 ticks, 154. King dollar down 281 ticks, trading 92 flat out. King dollar had a nice wide price spread yesterday. Accelerated volume. Bottom line, King dollar looks like it wants to go up to that August swing high. You have the euro trading at 119.25 to the U.S. dollar. The yen is at 112.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we go over to the SPY. What you have happening is this. This is subtle, but the bottom line is that if we stay down 39 cents, I'd like to see more volume. But that, you got a nice hanging man out here yesterday. And what hanging man's all about is that, you traded down to a low, 248.92. You closed at the highs. Bottom line, you had light volume. This closes underneath it. Your probability goes higher that this thing wants lower price tomorrow. So we'll see where that shakes out. NDX 100. Now, NDX 100 has made quite a ramp back up since this morning. That being said, bottom line, you're going to have you're down and you have volume once again. We are at 144.80. And we'll see how much more they put into this. Yesterday we had 34 million. You're at 22 right now. I expect we're going to about 26, 27 million, and we're going into that 27 million. If we take a look at the NQs, the future, what we have in the futures out here is that the NQs had that high volume low from yesterday that wanted to be tested. It got tested fast and furious this morning. It came all the way down to 59.19. Now the NQs made a 20-point rally back topside again, and right before I did get on the air, you get a couple sellers back in the S&Ps as well as back in the NDX 100. So we'll see if they're going to basically perform coming into the close. Thus far, we're down at 25 bucks. Gold contract. What do we have with gold? Gold contract traded down to a price point of $12.91. You're at $12.94. You've done 381,000 contracts. What that's saying, folks, is that I suspect that the lows of today will get tested once again tomorrow. So the gold contract has come back to strength. This is where, we broke out. We broke out on the 28th of August. The low there was $12.97. The high was $13.17. It had been in a consolidation going back 5 months. We're back down that level. Now, what I want to see tomorrow, I do want to see a retest of this level. You know, yesterday we came down to 12.99. You end up closing a lot higher, but you had volume. Today, you're down here. Same deal. You get volume. I expect that is going to get tested. We go take a look at the silver market. Silver is the same type of setup. Silver is down 1.7% out here today. You hit a low of $16.86. We're at $17.02. Oh, I like this setup. Okay, so silver's a better setup. This is good. This is real good. So silver, 1710. Oh, okay, 1710 is the number it has to get back inside of, but I like this number on silver. Silver hasn't been dramatic on the way down, meaning that we did 83,000 contracts thus far. Last week, going into lows, we did 86,000 contracts. Yesterday, we did 81,000. That baby is still... excuse me, looks that it wants to basically get above the $17.10 area. Notes, the 10-year note. What do we have with the 10-year note? 10-year note out here trading flat. We're at 125.21. You've done 1.1 million contracts. That 1.1 million contracts is coming into 1.5 million. So what you have in here is that we come down yet. Well, we come down the last 8 days inside the note and the bond market. You're coming into where they also broke out from, meaning they took off August 16th. The low of that was 125.21. We're at 125.21. You get down there yesterday with 1.5 million. We're at 1.1 million right now. If we go over to the TLT and you look at the 20-year bond fund, that is up 15 cents. And that looks like it's going to pull back a little too. But what that did do yesterday is this. It came into where it broke out from. You did 8 million shares versus 9.3 million shares versus 10.3 million shares. So the 20-year ETF also wants higher price. King Dollar. What do we have with King Dollar? So King Dollar had wide price spread, accelerated volume, all of the above yesterday. King Dollar right now trading at a price point of 92.02. We traded to a high of 92.460. You've done 21,000 contracts. That's a pullback, dramatically lighter volume. Yesterday we go topside with 37,000. Right now you're trading 21,000. That's saying that good old King Dollar wants to make a run up to this 93,840 level. And what's going to get interesting here is that if, in fact, King Dollar gets another sign of strength, as it gets up to that level, you can get a lot higher. If we go take a look at McEwen Mining, MUX, MUX is down 13 cents, trading 199. This came out with a secondary, and that's what that gap down was all about. 2 days ago, it gapped down from 240, going down to 213, and I believe it was a 40 million. Let me just see here. Yeah, it was a 40 million secondary offer. So bottom line is that if we pull this back a bit, let's pull this back. Okay, so you're going into the strength where it took off from in April. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 38. You got the Nasdaq off 24. S&Ps are off 4. Let's go over to our man, Mr. Andy Heckler, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here at TFNN every Tuesday and Thursday, 5 to 6 Eastern Standard Time. Get this program right on your cell phone. You go to TFNN.com. You just hit Tiger TV on the right-hand side. You're going to get some great program 5 to 6 Eastern Standard Time. Now, as you come over to our website at TFNN, what you're also going to see is that Andy has a great promotion going on right now. And what this is all about, Andy had done a workshop last year, great workshop, the 12 Essential Lessons for Trading Commodities. You can come over to our website. You can test drive either one of Andy's newsletters. His daily is Daily Essentials. His weekly is Technomet to Commodity Report. Test drive either one of them, both of them, and you are going to get that whole webinar that he did, the 12 Essential Lessons of Trading Commodities. You're going to get one each and every month. As you sign up, it's going to be on your page. The September one, it's going to be on your page immediately. And the first one is Commodity Markets and Demographics. So check it out on the front page of TFNN. Happy New Year!
Oh, thank you. Same to you and everyone out there.
Yeah, so you got Rosh Hashanah.
Rosh Hashanah, right.
That's
the
so,
Jewish New Year.
The Jewish New Year. So
always good holiday, and
yeah.
Very interesting markets, huh, Tom?
Yeah, they shake everything off, man.
They shake it off. So let's talk about the Fed. I want to talk about the Fed a little bit today. So, you know, I didn't listen in yesterday. I was busy writing and doing other things. Yeah. So if I review anything, I apologize. Yeah. But the Fed statement to me was very hawkish, all right? They did 2 things. First, they said basically, hey, there's going to be a 3rd interest rate hike this year.
Yes.
You know, 12 out of
December.
16 agree. Right. And then they said, hey, basically 11 of us say that we're going to have 3 next year. Right. Okay. So that, I mean, listen, they're going to come through with what they have what the market expected, what they told the market. But then they told the market that this quantitative tightening, or letting the balance sheet normalize,
start to run off,
is going to start in October at $10 billion a month. Yeah. And it's going to increase by $10 billion every quarter to a maximum of $50 billion. And it is not going to be data dependent at all. So it's basically putting it on a course, all right? A road course. Now, at the same time, what the Fed didn't say, and what really a lot of people aren't saying, is that we don't know what the composition of the Fed is going to be come 2018. We don't know who the chairperson is.
Right.
We don't know, who some of the new members are going to be. We don't know what their orientation is.
You already have Fisher that is resigning, and Yellen is out in January.
Term is up.
Yeah.
Right. So my point here is, we're steering this economy, this Fed, monetary policy, whatever you want to call it, into uncharted waters. We've never dealt with QT before, all right? We've never dealt with balance sheet normalization before. When these debt securities come off the Fed's books, they're going to go into the auction market. Someone's going to have to buy them, right?
Well, no, the way they're going to come off the books is that they're just going to expire. They're not going to rebuy.
I understand. Right. But the Fed, but the U.S. government is also going to have to continue to issue paper, correct?
Yes.
We had what was essentially a put underneath that paper
for sure.
For a decade.
You had more demand than supply.
Right.
Absolutely.
Yes.
Right.
Okay. So my point is, we don't know exactly how the markets are going to react to this. And the only market now, the dollar briefly rallied yesterday, but that ran out of steam, huh?
Yeah, but to me, that was strong. I mean, it looks to me like the dollar wants to at least get up to that dead cat bounce. So,
the dollar's facing another thing Sunday, which is the German election, which is really kind of could boost the euro up. So we'll have to see how that shakes out.
Is that Merkel? Is she running?
Yeah.
I know she's running, but that's the one. Yeah, but she's a shoo-in, isn't she?
She's a shoo-in, but it still cements the EU, the future of the euro currency, all that kind of stuff. You could get a bit of a
so
bounce.
make the euro strong versus the dollar. I get it. Okay.
Right.
Yeah.
And the euro's a big piece of that dollar index.
Yeah, 60%. Right.
Right. That's a majority, right?
Big. Yeah.
So all right. So the dollar has reacted, but precious metals have reacted.
That's for sure.
They've reacted for sure to higher interest rates here. And, interesting, thinking back, the Fed promised, Tom, that they're going to do the same thing they did in December 2015, in December 2016. And if we look at the gold chart, we see that gold made its low in December 2015. It made another low in December 2016. And it would be very easy to kind of say here, gold's going to make another low in December 2017 at the end of the year. But the geopolitical landscape's a little bit different this year. So, it's not such a no-brainer. Nothing is ever a no-brainer in these markets. But, gold's action after the Fed meeting is much more aggressive than the action in any other market, in my opinion.
It is. No, there's no doubt.
Silver has followed, but it's really gold that's taken this leadership baton.
Yeah. I mean, we came down hard. I mean, I was expecting us to come down hard, though. So I don't mind where we are right now, really. Tomorrow, I think, is going to be a huge day. Because what I don't want to see, a breakdown to like 1265. Right. Right where we are, right where we are is not the end of the world.
Gold needs to hold 1281.30 to keep the pattern of higher lows intact.
Okay.
I would imagine there's a lot of stops below there. Hey, maybe it gets down there and it takes him out and then it snaps back. I don't know. We'll see. But
and coming into a Friday, folks, is always dangerous.
Oh, I know. You're coming into a Friday, crazy Friday. You also have silver, 1680, important level in silver. So, these things have come down sharply. I still like them, but my style, you got to always trade with a stop.
Sure.
And like I said, I still like them because of the geopolitical environment. But the Fed was very hawkish. But hawkish, perhaps, on a ship without a captain, which is very interesting.
No, that is. Well, it's interesting, too. I mean, the platinum market, came down, but it didn't get destroyed like the gold market did. It's kind of interesting.
Well, that's true. But then again, platinum did go to a $374 discount to gold.
Yeah, you're saying that Tuesday. Okay.
Right.
Yeah, right.
And it's now at a $28 premium to palladium. I mean, this sucker was at a $1,000 premium to palladium.
I know.
So platinum didn't get destroyed, but, platinum has been destroyed.
Yeah, no, there's no doubt about that. And folks, if you've ever had a piece of palladium or platinum simultaneously in your hand, you'll throw away the palladium.
Yeah, well, that's true. It's denser. Platinum's denser. It has a a higher melting point, a higher boiling point.
Yeah.
And it's only a matter of time before industry starts using platinum as opposed to palladium, in my opinion.
Yeah, no, listen, they did that shift when palladium was so cheap, so inexpensive.
Right.
There's no doubt about that.
And the Russians were flooding the market with palladium. It made sense. But it's very hard for those purchasing managers at the automobile companies or the oil companies or the others that use these metals to say, ooh, you know, look at the value proposition here. They just continue to buy. Oh, we need more, we'll get more, but, you know, just order more. That's how they look at it.
Yeah. Stay right there, folks. Andy and I are coming right back. Right now, you have the Dow Industrials down 32. NASDAQ is off 20. S&Ps are down 3.5. Andy and I are coming right back, folks.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking to our man, Mr. Andy Heck. We are talking markets. We're talking commodities. And so natural gas out here today. We got, we got an injection. Where does this stand with natural gas now, Andy, as we're coming in? Well, today's the first day of fall, too. It's the Jewish New Year and the first day of fall, right?
Right. I'm trying to fix my natural gas chart here. If you could put one up for me,
yeah,
I'll
absolutely.
Definitely talk about it because it kind of went a little haywire. But what we got today is we got a 97 billion cubic foot injection into inventories, which the market was not expecting at all. and basically the market was expecting about 90, and that was a big number.
Interesting.
And
Only
what
7
happened
more was a big number. Okay.
Yeah, 97
Yeah.
was a big number, like 10% more than the market had expected.
Yeah.
And don't forget, the market had become accustomed to very small injections over recent weeks and months.
Yes.
So we've had 2 big weeks. Over the last 2 weeks, we've put in almost 200 BCF. And not only that, natural gas tried to get itself above the resistance. It broke out. It had a false breakout earlier this
that
week.
320 mark, right? Yeah.
Right. We got up to 316.60 on the October contract.
Yeah.
And we failed. Now we're 20 cents lower, and we're back in the middle of the trading range. I guess it's just too early now for natural gas to take off to the upside. But Tom, natural gas has to hold 288.50 to make a higher low. We made a higher high. If we can hold 288.50, it'll make a higher low. That'll be kind of a silver lining for the bulls out there.
Okay.
But right now, this thing, hey, it failed. No question about it. And oil's holding steady.
Yeah.
And I like what I'm seeing in oil. And let me explain
right
why.
now you're at $50.70 a barrel. Yeah.
Yeah. Let me explain why. It's all about market structure, Tom. The spreads are tightening. The one-year spreads have come down from $1.35 to under 40 cents on the WTI, and in Brent it's in backwardation, meaning that the 2018 price in December is lower than the 2017 price in December. That's a tightening of the spread. That tends to be bullish. You have processing spreads, the crack spreads. They are very high compared to last year. You got the heating oil crack spreads over $25 a barrel. Now, the gasoline crack spread has come down, but that's more seasonal because we're out of driving season.
Okay.
But it's still higher than it was last year at this time. So that's another bullish factor. Then you have the spread between Brent and WTI, which is up at $5.80, and that's the highest level since 2015. That's a political premium, and it's also a sign that the OPEC production cuts are sticking. And there's going to be another OPEC meeting coming up, and you got this Aramco IPO, and all systems point to a $55 price for oil, in my opinion. I think that it's holding very well here. The technicals look okay, but the market structure particularly looks very strong. I can't find weakness anywhere in the market structure here.
Yeah. It's going to be interesting, as to, I agree. I mean, oil to me really does look like you have 52 wide open and you get the 54.94 open, right? Yeah. Mm-hmm. And the 54.94, folks, is the swing high from April 11th. The 52 is the swing high from May 25th. Now, Mercedes-Benz, Tesla, electric cars. So check this out. Oil's been getting hammered for quite a while, but I start looking at what's going on, folks, is that Mercedes is going to put $1 billion into an electric plant in Alabama. Mm-hmm. And one of the main reasons is that the Tesla's S model basically has overtaken the high-end Mercedes models. Mm-hmm. Listen to this number, though, folks. This is pretty wild, Andy, what they're thinking. They're thinking that right now, let me get this number. Right now, there's not a lot of electric cars, but they're thinking that the acceleration is going to be pretty quick. Okay, so this is what Mercedes is thinking right now. That right now, U.S. sales are projected to grow fourfold from last year to 643,000 in 2021, which is not that far away. Do you know what I mean?
No, that's not that far away at all.
I looked at this, I says, wow, the segment is expected to be, listen to this. So in 2021, folks, that's only going to be 4% of the auto market. Fast forward 9 years after that, Andy, they expect 1/3 of all sales to be electric.
I'm sure that's the case.
Isn't that wild, man?
That's wild. That's wild.
That's sooner than we think, folks.
It is sooner than we think, and that's ultimately bearish for oil. But over the next couple of months, the only thing that really matters in the oil market right now is that China's buying like hand over fist.
Yeah,
That's
no.
what
I get it. Believe me, I
Right.
get it. I just thought when I saw this come across, I says, "Wow, this
It's
is
amazing.
That,
Huh? It's a long-term trend. No
it-
question about it. We'll all
one-third-
be driving electric cars.
I'm sorry.
We'll all be driving electric cars.
Well, if I'm in Florida, I won't be, but I need 2 cars because if you get how are you going to get out of here when there's a storm? One of the
Oh,
Tigers.
those batteries! Come on, those batteries eventually will go for 1,000 miles.
Okay, yeah, they would.
They will.
yeah.
I mean, that's the next.
That would
improvement.
make sense. Yeah, right.
Right. By the time that's my prediction. By the time 1/3 of all cars are electric, the battery can go 1,000 miles.
Yeah, which would make sense. That
Yeah.
totally makes sense.
Yeah. So another couple of things I want to mention, really important.
Yeah.
Iron ore collapsing. The price of iron ore is collapsing. Copper made a new low today, but the Baltic Dry Index continues to power forward. I think it's up to like 1450 or something like that.
Okay.
And Tom, I think the reason there twofold. First, China has been a buyer of dry bulk commodities, but perhaps more importantly, I was thinking about this last night. I think what's creeping into freight rates here is the insurance premiums because of what's going on around the Korean Peninsula. What you told me on Tuesday about the 30% of the copper stock sitting in
Yes.
South Korea,
Right.
kind of lit a bulb in my head.
Yeah.
And I think that freight rates are going up because insurance rates are going up.
Right.
Because the
that's
seas
possible.
are more dangerous.
Right. No, I can, and even if the perception is, if the insurance companies, say, hey, it's more dangerous, and they start putting premium into it, guess what? They're going to try to get as much as they can, right?
Oh, they always do, don't they? And they get it.
Yeah.
And those rates go up, and they stay up for a long time, and they trickle down. It's kind of like gasoline prices, you know?
Yeah, they always lose their ladder. The ladder is really quick on the way up, and they lose it on the way down.
It's exactly the opposite of commodity prices.
I know.
Right?
Yeah.
They take the elevator up, and they take the very, very slow stairs. That they go down one step a week.
Yeah.
Right?
Yeah.
So very, very interesting there what we're seeing in the industrial commodity side. But the industrial commodity prices are coming off. They were. I mean, if this Fed was as hawkish as I believe it was, that does step on industrial commodity prices for a while because, quite frankly, consumers start becoming much more hand-to-mouth if they have to pay more to finance their inventories than if rates are low. And that really affects commodity prices. And by the way, 30% of the copper and a big percentage of the aluminum in LME warehouse stock sitting in South Korea, I got to tell you, if they're financing loans, there's going to be liquidation of some of those stockpiles because they don't want to pay the higher financing rates.
Right. Well, listen, we appreciate the education as always. Look forward to the show at 5 o'clock, and Happy New Year, man.
Thanks, Tom.
Cooking, brother. Have a great one. Have a safe one. Stay right there, folks. We'll come right back into the close out here. We have the Dow Industrials right now down 32. NASDAQ is off 20. S&Ps are down 3.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So let's go inside the market and see where we're at here inside the Dow Industrials. First, inside the Dow, the strength versus the weakness out here. You had the Apple is the weakness. Apple's putting 14 negative points in the Dow. Procter & Gamble 12, Johnson & Johnson 10, Big Mac 5. Putting strength into the Dow Industrials. Goldman Sachs putting 14 positive points. Boeing 5, JP Morgan 4. If we do go over and let's go look at JP Morgan. So we're talking interest rates, and the JP Morgan has been trading to the top of its range. That range, the top is $95.21. Right now, you're at $95.24. What's going to get intriguing here coming into the close, and this is going to be really subtle, folks, and this is what it is. So yesterday, you traded up to a high of $95.29 in JP. You did 15.3 million shares, which is good share volume, folks, okay? Pushing into it, because watch, we were pushing into 13.7 million as well as 16 million. So, you know, you're 15.3. That's a good number. Now, today, you have a contraction of volume. We got over the high, and thus far, you're under the high, meaning 95.29. That would be a failure. It's quite a contraction. This is, you know, JP Morgan has every right and every chance to break out right now, to break out over this whole consolidation. It hasn't done it yet. Bank of America, let's go take a look at BAC. Same type of setup. Pretty amazing, too, that they're right to the T. Bank of America, the high out here of this consolidation is $25.35. Yesterday, you did 82 million shares. We got to 25.24. Today, you've got to 25.28, so you got over today's high. You're at 25.19, and the volume also has contracted, 48 million versus the 82 million. Coming into the close, it's going to get interesting watching these banks. They have every right to break topside, folks, if, in fact, these rates are going to be going up. And right now, as Andy and I were just talking, the Fed Fund future probability of a December rate hike on December 13th is 67% right now. So it jumped, and it jumped pretty extensively. If you remember, even about 2 weeks ago, we weren't over 50% until June of 2018. Now what has happened is that you got December on the table, and then, of course, the Federal Reserve, they said they want to go up 3 separate times in 2018. We'll find out if that's the case. When we actually still look at the rate structures across the world, our rates are still dramatically high. Where the 10-year right now is 2.2 on the 10-year. France is at 0.7%. Germany is at 0.4%. Spain is at 1.6. Spain is tough shape. financially. Portugal's in tough shape financially. That's a 2.3. So you can see correlation-wise, world-wise, we're still at monster rates. What we also have is this, is that when we start unwinding, the amount at the beginning is going to be very small. That's the reality. It's a raindrop. That being said, as we start moving out a year and a half from then that's not going to be small. That bond market hasn't had a hard time finding buyers, and it's just not the bond market. What you will have is that there is going to be a huge amount of players that are going to want to be in that mortgage-backed arena, and that's going to be the REITs. The REITs are going to be all over, the real estate REITs are going to be all over those mortgage-backed securities, folks. Because of the low-rate environment that we're still in, those REITs, what they do is that they will leverage those mortgage-backed securities up to the hilt in order to basically pay a small dividend, and that's kind of how that market works anyway. Some of the inside the NDX 100, the strength versus the weakness out here. Strength is Netflix, that's up 2.2%. You get American Airlines up 1.8%. Seagate Technologies is up 1.4%. Taken away from it, JD.com is down 3%. You get NVIDIA down 2.3%. NetEase is down 2.2%. We go take a look at the higher volume stocks in this marketplace. What we have out here inside the S&P, you have, let's see, General Electric is up 44 cents. Ford is up 1. Transocean is down 73. We're going to go back to that. That thing is getting killed. Hewlett-Packard is up 17. You have Kroger, that's getting killed too. That's down 53 cents. That is $20.26. Amazon's taking them apart, of course. You get Comcast up 5 cents. Anadarko Petroleum, that's got a big bid. That's up 3.35, but that has been a dog. That's come down pretty dramatically. Let's go over to Transocean. So RIG, R-I-G, that's down 72 cents right now. Okay, so from highs to lows in the last 6 months, we went from $13. We established a low at $7.20 about a month ago. Yeah, this is a big problem. This is a big problem. So you have a high volume low at $7.20. You're at $9. This hasn't been able to get out of its own way. Yeah, this is going to go after the $7 again. You break $7, this thing would really be a problem. You know, as it is, when you bring this back, this has been quite a downdraft. It started at 163 in 08. So 163 to 9. And what that's all about, folks, is that rigs specifically, offshore drilling, large, deep water, folks, these were the kings of the water. Kings. And guess what? What happens is that the amount of oil that shale producers have pushed out, they don't have to spend the money anymore to go out in the middle of nowhere and go down miles in order to get that oil. Apple ABC structure on the way down. Apple right now is at 153.59. It's into the gap. So when you get into the gap, and the gap we're talking about, when Apple came out with numbers, Apple had closed at $148 on August 1st. August 2nd, it was trading almost at 160. Now, it's into that gap. When you're into that gap, gaps are like magnets, particularly on the way down. The top of that gap is 155.02. You can see you're at 153.60. You have some volume. This thing wants to fill the gap. And the bottom of that gap is 150.22. What will end up happening with Apple more than likely, let me just see something, because Apple's probably breaking. Yeah, see, it is. So this is going to get intriguing in Apple's case. And what it is that Apple's going to show up on quite a few machines tonight of just about breaking down. Right now, Apple broke its 50-day moving average yesterday, which, you know, people trade off of this. Now, we're right at the 100. You break the 100, and then people are going to look and say, oh, no, it's going to the 200. And the 200 moving average is quite a way down here, folks. You're talking about Where are we? Yeah, you're talking about 142. So you stay right there, folks. We'll be coming right back. Dow Industrials right now trading down 48. You have the NASDAQ down 30. S&Ps are down 5.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 47. You get the NASDAQ off 30. S&Ps are off 6. And, folks, as you come over to our website at TFNN, you're going to see right on the front page, folks, September 30th. We're coming up to Boston September 30th. Come visit us. We get a lot of Tigers and Tigresses up there. We're doing a workshop. This workshop is sponsored by Nadex, so it's a free workshop. You're going to get a lot of great education. It is on September 30th. It's going to start at 7:45 a.m., 7:45 to 8:30. You get a continental breakfast. This is at the Boston Marriott, folks, which is in Burlington, Mass. So check it out on the front page of TFNN. Come join us. We'll be out there growling and prowling from 7:45 in the morning to 1 in the afternoon. A lot of all the exactly what we're going to be talking about is right on that page as soon as you hit that banner. Coming into the close out here, so let's go take a look at the Dow Industrials. Dow right now is down $50, and that is intriguing, man. I was kidding about that, but you know, Dow does look like all of $50. It's going to close at the low of the day, and then that, my understanding is that that has been outlawed. that there's no such thing as closing at the close of the day, or in fact going down whatsoever. Oh my God, I'm telling you, you gotta love these markets. Let's go to the NDX for a second. The NDX, man, when the NDX actually gets volatile, which it is now, this thing, man, this thing can move like in a heartbeat. So we just moved, we just moved down 15 points. We just went from 59.57 to 59.42. And what is hanging down here, by the way, is that we have an additional. You got a nice high volume low down here at 59.21. I don't expect you're going to get down another 20 points right now. But what that is laying up. That is laying up out here more than likely some pressure overnight, some pressure Friday coming into the weekend. You stay right there, folks. We'll be coming back with some numbers for you. Dow Industrials down 51, NASDAQ off 30, S&P's off 6. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you know, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, you know, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, you know, it's a great deal.
No, we appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a happy new year for Rosh Hashanah. It's a beautiful thing. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials down 53. NASDAQ off 33. S&P's off 4.5. Gold contract down $22, trading at $12.94 an ounce. Silver down 33 cents, $16.99 an ounce. Let's get into that gold market right away. So we take a look at gold. What you had out here with gold, folks, gold goes down to a price point today of $12.91. You did 386,000 contracts. You closed out at $12.94. I expect what you're going to see out here is that we're going to retest the lows of today, more than likely tomorrow. You're coming into a Friday. You know, it is into support here. I want to see the support hold. Silver. What do we have with the silver market? Silver set up a little bit better. Silver was down 1.9% out here today. Gold was down 1.6. Gold was down less. But the way silver is set up, what you have is that silver got down to $16.86. You are trading $16.99. And this is the level also that has to basically hold. You're talking about the 1670 level, 1665 level. You don't hold those levels, we're going to be down to 1619, and you'd be down to that level pretty quick. Notes, 10-year note. Now, 10-year note, we've been down 9 days in a row. You know, 10-year note made a high of 127.28 on the 8th of September. Down, you get light volume. What we've done with the 10-year note out here today is that we tested the lows of yesterday, 1.2 million contracts versus 1.5. So the real kicker is going to be, is that going to hold the lows that we're laying out here? So it has quite a bit of support at this 125.02 level, 125.05 level. Right now you're trading at 125.19 level. King dollar. What do we have with King dollar? So we're going into a Friday. You're going into a weekend. And inside the weekend, of course, you get currencies, metals. They love being volatile. Yesterday, the dollar caught a bid. You got from 91.515 up to 91.845. I'm sorry, no, 92.495. Had the volume behind the move. Today we backed down 21,000 contracts versus 36. You're backing down with lighter volume. That's setting up a run to 93.840. So the way that baby is set up at this particular point, it looks like that it should be running to higher price. The culprit out here inside the Dow Industrials bringing the Dow. Well, actually, let's go look at the Dow. This is the first day we haven't hit closed at an all-time high. Yeah, so this is pretty amazing. We hit an all-time high on the Dow. Dow Industrials 22,419, closed lower, and I just that is the first going all the way back to September 11th. Each and every day we were closing at a new all-time high. Let's go take a look at the NASDAQ Composite. NASDAQ Composite, that goes sideways to lower. Volume-wise out here, we had 1.7 billion versus 2 billion yesterday on the NASDAQ Composite. If we take a look at the NYSE, what we've done out here is that you've done 726 million versus 837 million. And Mr. Dave White, he came up with something pretty cool, actually. And I suspect this is exactly what it is. You know, we were talking, you know, we've been in these markets for a long time, folks, and when you have holidays, bottom line, you get less trading. Well, guess what? Things change because now it's the machines that are changing, that are trading. And you can see it out here today. Normally, with Rosh Hashanah, things would be a lot slower. Guess what? Those volumes aren't a lot lower. They're not as low as they have been in the past. You have the SPY did 44 million shares. We take a look at the NDX 100, the Qs. Qs out here did 28 million shares. Let's go take a look at the IWM, because the IWM did go up to its highs. Thanks, Z. Appreciate that, man. You had the IWM get up to $144.26. We closed at $143.69, and this is a failure on price and volume. Pretty amazing that it actually made it there, too, because the IWM had been the weakest indices. That just, as our own S&P was up at highs, the IWM was still trading down at 139. It made the run the last 8 trading days. What it did today, it took out that high, took it out with lighter volume, closed underneath it. That's a failure on price and volume. Let's go over to JP Morgan Chase, because JP Morgan Chase, as well as Bank of America, that was going after its highs. We closed at $95.03, and guess what? That is a failure on price and volume also. This one is so subtle, it's wicked. So your high of yesterday was $95.29. You did 15 million shares. Today, you went to 95.37. You did 9.8 million shares that closed underneath it. Let's see if Bank of America did the same thing. BAC. We had been looking at this in the hour, right, the 3 o'clock hour. Bank of America got to a price point of 25.28. over the high of yesterday, 25.24, and did close underneath it. So that's a failure in price and volume also. We can put this on the weeklies now. And what's going to be intriguing on the weeklies, thus far, let's see. So you come, oh, this is interesting on the weeklies. On the weeklies, man, it's going to need a lot more volume. You're coming in at 740 million. You've done 264 million. So if you see if Bank of America closes down about another 40 cents tomorrow, that's going to be a major failure. JP Morgan, let's take a look at JP Morgan, and I'll put that up on a weekly basis just to see where these weeks are shaking out. JP Morgan looks a lot stronger. Yeah. So on the weekly basis, looks like JP Morgan's going to have it. JP Morgan's pushing into this swing high. Actually, 81 million. No, it doesn't have it. Interesting. Doesn't have the volume. You stay right there, folks. We'll be coming right back. Dow Industrials finished down 53. NASDAQ off 33. S&P's off 4.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And if we take a look at Intercept Pharmaceutical, you talk about taking a beating. So they had come out last week, folks, and said that their liver drug did take some people down, meaning killed them. Bottom line, they should have got that count right because what happened is that the FDA came out today saying that actually more folks had actually died. The Intercept had come out and said 10 people were dead the FDA came out and said, hey, listen, 19 patients died after taking a liver disease drug, from Intercept Pharmaceuticals. That just took Intercept down an additional $24, and this thing has monster problems. So if we go back on a monthly basis, this is the equity that had gone in January of 2014. It went from $65 to $497. This is like, it's the classic. It's going right back to 65, and I suspect with that type of destruction, it's going to go lower than 65. Let's go over to our man, Mr. Basil Chapman, as we do every Thursday at 20 past the second hour. Now, don't forget, folks, Basil's got a great program right here at TFNN. Every trading day, 12 to 1 Eastern Standard Time, and no matter where you are in the world, folks, you can get all the programming at TFNN right on your cell phone. You go to TFNN.com, you hit Tiger TV. Basil Chapman.
Hi, Tom. How are you?
I'm doing great. Happy New Year, man.
Thank you very much. Always chuckles like we get 2 chances to get it right.
How cool was that? I know.
Yeah.
Seriously. That's so. This New Year. So that starts. Is this like the beginning of the Bible? How does that start?
This is just celebrating the New Year. Actually, it started in many different ways. If you think about it, it's part of. It's one of the holidays that is perhaps a little bit more serious when you get the spring holiday.
Okay.
The Passover, that is really the spring. That was initially the celebration, a change of seasons, as well as different religious things, and it came together. So this is the more serious one, and this leads to the Day of Atonement, Yom Kippur, which is, I think, Saturday week. And that's a day of fasting to repent and prepare for the next year.
Yeah, I know. I always liked that Day of Atonement. I did a lot of business with a lot of my suppliers, and they told me how that Day of Atonement works. That's pretty cool.
Right.
Like our confession. Just say it once. Hey, I'm sorry.
Right,
okay.
right.
We're okay now, right?
Up until Friday afternoon, you're okay. Then after that, you start off again.
I love it.
So, yeah. So this is a fascinating market because this last move up, you can see in the Dow, there are 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, green candles consecutive, and even today there was a new all-time high.
Right.
So that new all-time high is just very interesting because I'm looking at the MACD and the slow stochastic, and the slow stochastic is still flat. When it curves, I'm pointing on the daily chart. When it curves over, that's when you get the tilts to the downside, this roller, what I call the H pattern. And in the same thing over here. But look what happened. In this particular instance, we've pulled back, and yet the stochastic still at 97.35, and 100% is a full house. That you can't go higher than 100. And we're almost so that implies 2 things. One is that, for me, as long as it flattens out and doesn't break down, it gives you some support. At the same time, what I've said to subscribers, because we went long when the Dow had that big spike up, what was that, on the 11th, we had no choice. We had a small short position, and then what I did, I flipped to the other side, and we had a much larger long position, which we still have. Now, this is going to be very interesting for me because in the Dow daily, I have a leg C. And you know, in the Chapman Wave methodology, we're always looking for Ds. Let me just show this chart here. You identify the lowest low bar, and you merely count each successively higher peak. When you get to the 4th highest peak, peak D, we label them A, B, C, D. That's when other things can happen. It can go higher, but that's where I always like to think you raise your foot off the accelerator and you hover over the brake. You don't have to do anything, but that's a kind of a caution light. And now look what happens. You go to the Dow Diamonds, DIA, that's already in a D. So now it's a little confusing because D is where I've got to become a little cautious. And we had a bit of a pullback today. It's not much when you think of what happened yesterday. The Dow was up, about 63 points, and today we only gave back 53. I'm looking at this and I'm saying, okay, we've been very selective as it is going into this particular move over the last 2 weeks. Over the last many weeks, we've had different positions. We had, up until this morning, we had 9 longs. This is very unusual. And all of them were up. In fact, some of them, like General Motors, up about 13%. Bank of America's up about 7%. We even have a speculative stock, BLDP, which is Ballard Power, which is up 14%. Earlier in the day, it was up about 18% and is still acting quite nicely. And we have Bank of America, I think I mentioned Bank of America, and MWA, which is Mueller Waterworks. So it's a real mix, and that's up about 7%. So what I'm looking at here is I'm looking at what do we want to short. And yesterday morning, for my subscribers to my opening call, I said, we'll start looking at the SQQ, which is the triple short of the QQQs, because it looks to me like it's getting very heavy, struggling a lot. The QQQ hasn't broken down, but it really is weighted. And I've been speaking about this for a lot, during all my shows. I talk about the really big stocks that were leading the market, like Apple, like Google, like Netflix. You can go through, and Facebook, you can go through them and you'll find that Amazon, you'll find a number of them have made tops and have not broken out to new highs. Look at Amazon. It made their top at 1,083.
Yes.
And now it's down at 974. That's a peak D in the daily, peak D in the weekly, and a G/C in the monthly. So the monthly is still strong, but wow. It hasn't participated at all. So this has been very selective. I think part of it is the rollover. The Dow has 5 financials, so it's really been helped. I heard you talking about Bank of America just a moment ago. We're long Bank of America, and I have to tell you, this cup formation has been so familiar to us. Let me just show you something very interesting. Look, you've got a cup formation on the left, and it makes a new high at peak D. I keep talking about these Ds that are very important. You can see. And from 25.35, it pulls back to 22.75 on the 7th of September. Now it's gone up almost in a straight leg. And the pattern that I always talk about is this left side, right side in the cup formation. So I think that there's a chance that it could still hit the 25.35 level. It got close today. It was 25.28. But I do like it could pull back here, but I'm thinking that so far, it's in a kind of a leadership role. Look at the MACD and stochastic in the daily. And look at the weekly. The MACD is just about to cross positive, and it needs a D, and that D would start 1 penny above 25.35. So I think we're very close to seeing a real test of whether the financials are able to continue to lead. And that's partly due to the TLT, the yields going higher and bonds are going lower. How long that's going to last for is really the big question. So I think this is a very important period for a number of sectors because, I think I spoke to you about 2 weeks ago, and I said, I'm beginning to think that we should have a pullback in gold, silver, bonds, and copper, and that crude oil could rally and the market could rally, but it's the duration that we're really looking at. So I think that this is going to be a very interesting week, and we're getting ready to do some shorting. But in the meantime, the longs have been working very well.
Come over to our website, folks, at TFNN. You can test drive Basil's newsletter. You go to newsletters. You go to trading newsletters. You see the opening call. Test drive it 30 days, absolutely free. Basil, have a great New Year, safe New Year, and, of course, look forward to the show tomorrow.
Thank you, Tom. Same to you.
Stay right there, folks. Come right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of Timing the Trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 53. NASDAQ was off 33. S&P's off 4.5. Now, this is, for all you Patriots fans, this was a strange one in itself, and this was about Aaron Hernandez. So Aaron Hernandez, folks, okay, was an amazing football player. Ended up basically blowing away at least one person. Ended up in jail, and you're talking about a guy that had everything. He's only 27. Now, this is pretty intense. So what this is about is that this just came out a couple hours ago. So Aaron Hernandez, the former New England Patriots tight end who committed suicide in April while serving a life sentence for murder, was found to have a severe form of CTE, the degenerative brain disease linked to repeated head traumas, which have been found in 100 former NFL players. Listen to this, though. This is pretty wild. Now, the problem with this disease is that it can only be found after you're dead, because you have to get inside the brain. Hernandez is the latest former NFL player to have committed suicide and has been found to have CTE, joining the slew of other players. Let's see. Now, the other players that so far that this has happened to, folks, have been older than 40 years old. Hernandez is one of the youngest NFL players to have been found with the disease. In July, researchers at the Boston University released findings that showed they found, listen to this number, this is a pretty sick number. They found CTE in the brains of 110 of the 111 former players that they had examined. Hernandez's brain was examined by Dr. Ann McKee, chief of neuropathology at the VA Boston Health System and director of CTE Center at Boston University. She has developed categories to describe the severity of the disease. Those with stage 3 of CTE typically have cognitive impairment and trouble with executive functions like planning and organizing. Those with stage 4, the most severe version of the disease, had dementia, difficulty finding words, and aggression. Aggression, all right. Dr. McGee said in a statement that Hernandez had stage 3. The discovery of CTE adds another turn in Hernandez's meteoric rise and fall. After a standout career in Florida, Hernandez signed a record $40 million contract with the Patriots in 2012 when he was 22, just 5 years before he'd been working menial jobs in his hometown of Bristol, Connecticut. He drove a $300 used car that he brought with borrowed money. Yet 10 months after he signed the contract In 2013, the body of a friend had been shot multiple times, was discovered. He was convicted of that murder. He was acquitted of 2 others from 2012. Bottom line, even his demise was filled with turmoil after Hernandez died. His attorney called a news conference in front of the office of Chief Medical Examiner, accused the state of illegally withholding Hernandez's brain. Hernandez's body had been discovered the day before, tied with a bed sheet to the window of his prison cell in Shirley, Mass. His death was later confirmed a suicide. The findings may help Hernandez's family if he chooses to file an award of a class action suit inside the NFL. Players who are younger than 45, players who are younger than 45 when they are found to have CTE can receive as much as $4 million. Those who died after the settlement was approved in April 2015 are not eligible for the award, but Hernandez's family could argue for an exemption. Pretty crazy. That's pretty intense. That number of they're gonna get something done. You know, we all love watching football, man. But if everyone's gonna freaking die and die bad deaths from 110 of the 111 former football players basically had it. That's not a good scene. That is not a good scene at all. Amazing. It's crazy, actually. 877-927-6648. Let's go SWKS. So you had Apple go south, folks. You had their suppliers go south. Skyworks down $1.38 today. Yesterday, it was down $7. We went from price point of 108 to 102. You have volume behind the move. If we take a look at this and we put this on a weekly basis, what you're going to see is that this is making its way down to $94.35. What that is, that's a high volume low that's been laying out here. AVGO, what do we have with Avco Technology? Avco Technology, that was also one of the Apple suppliers, down $253 today, trading $240. Avco yesterday traded down from a price point of $249. You're at $240 right now. We put this on a weekly basis, and what you're going to see is that this is also going after a swing, but this is going to be intriguing because, so this has a swing low out here of 227. Now the high of that is 240.19, right where we are. That being said, this is going to be a little problem for this equity. The reason being, it's not like Avco had a high volume low as did Skyworks. So this is the first time it's going after this low. And you're going after it with volume. We've already done 13.3 million. There's only 10.1 million at that low. Now, I don't expect we're going to hit that low this time down, meaning by tomorrow. It doesn't make any sense that we'll hit it by tomorrow. Apple, if we go to Apple for a second, Apple's going to show up in a lot of machines tonight. And the reason it's going to show up in a lot of machines is the aspect of folks that use moving averages. Because Apple's trading 153.39. It had broken its 50-day moving average yesterday. That 50-day moving average was laying out here at 156.95. It is right at its 100-day moving average, which is 153.13. So what you do have there is that when folks do use those averages, you break that 100, your probability goes pretty high that you're going to go to the 200, and the 200 is dramatically lower. The 200 is laying out here at 141. Now, the gap on Apple is at 148.41, and I do expect you're going to see that gap get filled. And when you get into a gap, which Apple is into the gap right now, the top of that gap is 155. The bottom of the gap is 150.22. It's going to go after that gap, close that gap up. And, we'll see how that shakes out from that particular point. What you do have is that, you have Apple coming off the high with volume. Last week we went from 163 to 157 with 220 million. That's after making a high with 126 million. Apple could be a little problem child here. And that's technically, fundamentally what is going on with Apple. Bottom line, it has to do with the production date. When are they going to get these phones produced, how many are they going to produce, and when are they going to get them to their clients. You stay right there, folks. We'll be coming right back. We had the Dow Industrials finish down 53. NASDAQ off 33. S&P's off 5. First day of fall, folks. You're going to love it. Stay right there. We'll come right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And, you know, when Andy and I were talking on the 4 o'clock hour, folks, we were talking markets, we were talking the Federal Reserve, and we were talking Janet Yellen. What is going to get intriguing, Andy had brought up the aspect of, hey, listen, what's going to happen next year? You know, you have Fisher that's retiring. You have Janet Yellen that her term is up in February. You have 2 other openings. There's going to be 4 openings. That's what it looks like when we were talking February. So there's no doubt that things could change, and they could change pretty quickly, meaning as to what the folks that would be replacing the people that are on the Federal Reserve Board right now, what do they think? Because what has happened is this, and, you know, this actually probably started in Japan. You know, I met Mr. Basil Chapman. He talks about this quite a bit, the Japanization of bonds. And I'm talking about, Basil was using this term, you know, going back 12, 15 years ago. And he had said that he thought our rates were going to do the same thing, and sure enough, that's what they did. The amazing part is that inside the question and answer yesterday, Janet Yellen basically came to the conclusion that, guess what? No one really knows what's going on inside the inflation story, why they can't get inflation going. Because in the past, folks, what has always happened is this, is that in the past, and you've heard a million times, that you go into a recession, as you come out of a recession, it accelerates faster than we have. That's one of the first things. Second one is that when the employment rate goes down, that inflation starts going up. Now, there's been a lot of different theories out there as to why the inflation rate, well, first off, why the acceleration rate has stayed lower. I think one of the valid ones probably have to do with the amount of opiates that are actually in the marketplace. And I'm not talking about illegal opiates, folks, okay? This has been going on for years. I remember telling my mother, okay, so I'm going back 50 years ago, I remember watching just ads on TV saying, you know what, the medical community in general, we're always telling you that you're sick. There's something wrong with you, you need this, you need that. Now, let's fast forward 15 years ago. 15 years ago, you start hearing on TV, there'd be a new drug, for a new something wrong, that is something wrong with you, right? The amazing part, my perception of this is the amazing part is that people have actually bought it. So they bought the aspect that something's wrong with you. Then they buy the aspect that they start taking the drugs. Well, when they start taking the drugs, folks, okay, the bottom line is that you don't even know what those drugs are doing. You take one drug for one thing, you take one drug for another thing. It's like, you know, it's insane. And I can tell you, the amount of folks that are on drugs are bigger than I've ever realized, because I went to, you know, you get a physical, and the people didn't even believe I didn't take anything. And it's not that, it's just that, it's just how it is. Do you know what I'm saying? Because the context of you're masking something on a continual basis. Now, I understand people have to take drugs. But anyway, let's stay with the subject. The subject would be that the amount, when opiates first come out, in Florida, you know, I've been down here now 20 years. What happened, we had pill mills everywhere, and it was like so bad, it was insane. Those got closed up. And what a pill mill specifically was, is that doctors would give out the Oxycontin, or whatever the oxycodone, whatever one's the stronger one. They'd give those out. They had people coming from everywhere. They got rid of those. But guess what? It was too late when they got rid of those. All that ended up happening is that across the country, they had them. Not only across the country, but what I've seen is this, is that people actually think that that's normal, that you have like that type of drugs inside your house and you take those types of drugs. So we got used to them. That in itself, getting used to it, what does that do? That pushes production levels down. That's going to keep things down. It's going to keep things down for a long period of time. So I suspect where the acceleration comes from, that's, you know, that's stopping a lot of production. The inflation part of it, okay, the inflation part of it, I would say flat out, that's all about, it started with China opening, of course, which we all loved because everything's less expensive. Now what has happened as it accelerates forward with the Amazons of the world. The Amazons of the world, okay, bottom line, that is going to keep inflation down, and I suspect it's going to keep it down for quite a while. The reason is that everything is so transparent. Think about how many times that we always wanted to know what is the price of something. And think about how hard it was to find out the price of something, right? I did a deal the other day. So check this out. This was a trip. I did a deal the other day, and the supplier is telling me that, well, I wanted a pricing point of 10 units, 20 units, 50 units, and 100 units. And so the supplier says to me, he says, well, we don't give those out because then you're just going to use us against them. And all I said back to him, I says, well, if you don't give them out, how am I going to know what the price is? And I says, I know I'm going to find the price. I says, because it's going to only take me about another half hour or 35 minutes. I'm going to find someone else that's going to get me close to the price, right? Bottom line, I got the price. And, of course, what do you do when you get the price? Exactly what they just said you're going to do. I'm going to work the price because of the fact that, okay, now I know what your margin is. I'm going to try to bring it down a bit. We're going to make a deal somewhere in the middle. I would say in business, everyone is doing that on a continual basis, so it's keeping margins flatter. Now, if we go over to the car business, when I saw the amount of money that the car business was making, and this is why the Amazon is in that car business, they are working, folks, on a 52% gross margin, O'Reilly Automotive and AutoZone. That's insane. That we know we pay a fortune for parts. There's no doubt about that. 52%, that is like that gross margin, that's unbelievable. So you can see why an AutoZone, went from a price point, when you're taking a look at it, AutoZone in 2001 was at $50, goes all the way up to $819 in 2016. Now you're at $553. Guess what? AutoZone's going a lot lower. The Amazon's going to destroy that whole business aspect. The next one, and this is where we go back to the drugs again, Amazon is going to get in the drug distribution business, the legal drug distribution business, folks. And they will bring those margins down, too. Now, when we were bringing up the margins inside the drug business, the drug, it was approximately, well, I'm talking about the retail drug business. You're talking about the Walgreens of the world, the CVS of the world. That's running 24%. 24%, that's plenty in Amazon's world. They just bought, Whole Foods in the grocery business. That margin is really slim. And the drug business, think about the delivery aspect. Drugs of what? Well, you're talking about a bottle of pills, and whether it's, I don't know, it's $20, $100, whatever a bottle of pills are. They're going to bring that down. So deflation is going to be here for quite a while. You stay right there, folks. We'll be coming right back. We had the Dow Industrials finish up 30, down 33. NASDAQ down, Dow down 53. NASDAQ down 33. Folks, September 30th, come visit us in Boston. I'm doing a free workshop. All the details on the front page of TFNN.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Here's a number for you. United States household wealth increased in the second quarter to yet another record by solid gains in financial assets and rising property values, figures that were supplied today by the Federal Reserve in Washington. Net worth for households and nonprofit groups rose by $1.7 trillion, oh my God, 1.8%, and this is the number, so listen to this number, folks, $96.2 trillion. This is an all-time high. Value of financial assets, including stocks and pension fund holders, increased by $1.2 trillion. Household debt increased by an annual rate of 3.7% in the second quarter. Household real estate assets rose by $508 billion. Owner's equity as a share of total real estate assets were up to 58.4% from 57.9%. That's a good number. The increase in household wealth reflects steady growth in the housing market, which were up 5.7% in June from a year ago, based on the CoreLogic Case-Shiller data index. Mortgage borrowing advanced at a 2.8% annualized pace. Other forms of consumer credit climbed at a rate of 4.6%. Non-financial debt grew at a rate of 3.8%. Federal government obligations expanded at 3.6%. State and local debt declined at a 1% pace, while business borrowing increased by 5.3%. So the state and local, it's good that their debt declined by 1%. These state and local governments, folks, you want to keep an eye on them, because what you are going to see is that because of the rise in the aspect of what the housing market is worth, bottom line, keep a check on your cities and on your states to make sure that they don't go up in your taxes too much, because what you are going to see is that you can stay at the same rate, but because the house is worth so much money, your appraised value, they're going to be pushing lots of money into those coffers. You stay right there. Our man, Mr. Andy Hex, coming up next to Growl and Prowl with you folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice piece of motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 9 o'clock. Look at it.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.